Hello and welcome to another update video about Bitcoin. Yeah, Bitcoin didn't really do much today. The entire crypto market didn't really do anything today. If you take a look here on TradingView at these prices and the percentage changes, there isn't really a lot that happened. Bitcoin really also just sideways today. We had a little bit of a recovery, but really nothing noticeable, nothing substantial. And therefore, we want to take a look at the 4-hour chart here, zoom out a little bit, take a look at the price action that started in June, because this is basically a very relevant pattern which is forming here. So we want to talk about options. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. Let's first start about the bearish pattern. I had a few questions about if I could show the bearish pattern. Sure. So the bearish pattern is still very likely. However, at the moment we continue to hold above support. So it's nothing that is imminently, well, it is likely still to occur, but it is nothing imminent in my opinion. Yeah, it will get much more on the radar again below 17.5K. The bearish case was never invalidated, but as I said to you before, if we hold this green support area and rally to the upside in 5 waves, which we did, it is a really good first indication that the bear market ended. However, it's too early to really confirm it, unfortunately. There are further patterns that still allow a bearish outcome. So let's talk about options here. We have a possibility to count it bearish as a WXY pattern. I had it before here as an ABC, but due to the change in structure here, basically here in March, it cannot be counted as an ABC anymore, but I can count it as a WXY. So this might be a bit of a complex video. It might not be for everybody. Yeah, some people are only interested in the short-term price action, but other people are interested to understand all the different scenarios in quite a bit of detail. So if you get confused, maybe just wait for the next video and I will only focus on the shorter time frame price action. Yeah, but before we had ABC. ABC was on here because we have the A wave to the upside, a correction possible to count it like that. Then the B wave to the downside and the C wave to the upside here in 5 waves. Yeah. I mean, okay, it could still be ABC if I say the C wave didn't end here. So A, B, B, C. I had the C wave here because you can count a 1, 2, 3, 4, 5 of the November lows. With a bit of a modification, I don't like that count too much. Really don't like it too much. I can say, right, A wave here, B wave here, and the C wave ended here at the last high. Why is that possible? Because I can also count it 1, 2, 3, and then an expanded flat 4, into the 10th of March lows and then 5. So that would still be a possible ABC pattern. but it would turn into a WXY if we do something like this. WXY. So if it now rallies in 5 waves, because then I can say we had an A wave in wave Y. A wave that topped here in February, early February. A. Then this was a B wave, again in 3 waves. And we're now going to move up in 5 waves. 1, 2, 3, 4, 5. Where the first wave could have been done already. Now, this would be a bearish pattern. It might push it into the 35K region or so, because it would still count as a wave 4, as a WXY, and the Y wave is an ABC. And if this count happens, we can still get 5 waves down, right? And head back to 10K, which is why if I'm, let's say, short-term bullish, it doesn't necessarily mean that, I mean, I'm only short-term bullish because we're holding above support, right? I have to I change my view if we break support. It's very easy. You know, I don't have no bias. It's just, you know, you go by what the chart tells you. So that's the advantage of Elliott Wave, because it tells you in a very objective way when you as an analyst or trader should change your view. There's no point being bullish because you like to be bullish or something. You know, you're bullish because ideally there's a long trade setup somewhere available, or, you know, something like that. Yeah, just because we have a possible 5 wave to the upside coming doesn't mean that the bull market has started. So as I said many times before, we take it level by level. We take it level by level, yeah? And there's a strategy behind it as well. Okay, so that is basically the bearish possibility. If we, as I said, there's also a possibility to say A, B, and C, but then you will only see this play out if we break below 17.5K. Very important. So that's the bear count. What's the bull count? The bullish count. Bullish count would imply that the wave 2, which is the larger correction in the bear market, finished here in November. We indeed rallied in a 1, 2, 3, 4, 5. And this was then a wave 1. So bear market completion here, down there in November. We already rallied in the first wave in the bull market. This here was a wave 2 correction that came down here on the 10th of March. And we're now rallying in the third wave. That would be the very bullish count. And that would set us up for 120K plus. And it would mean, okay, we had the wave 1 done. What you would then see is in the next step, well, the wave 2 is possibly done as well, right? And we would then see in the next step here, these 5 waves to the upside. Again, that could be the first wave of a third. So it will then escalate higher. We'll get our third wave, a fourth, yeah, and a fifth. And this would then again form a larger wave 1. If we then come down, hold a higher low, that will be the massive bull run that starts afterwards. But by then we've already doubled or tripled the price. So yeah, this is the bullish count. Also here, you know, you have different scenarios in the short term, how this can unfold. For example, I could say that we had our 5 waves complete now. 1, 2, 3, 4, 5. That's how I counted at the moment, that this was the wave 1, the top on the, I think it's the 16th of February. And we came down in a wave 2. Got a small problem with that this wave 2 correction was very short. But then again, that's not necessarily too much of a problem. There is no clear rule how long a wave 2 should be. There are some guidelines, but I don't take it too seriously. Yeah. But yeah, it could be a wave 1, a wave 2, and then we're now rallying in a third wave. Or alternatively, which is also possible, that the wave 1 only ended here, basically here on, or this week. We say 1, 2, 3, 4, 5. And the wave 2 is only starting now. Now, if that happens, we are breaking the yellow support area that I have on the chart, but we're going to head back into the green support area. So again, very, very simple. As long as we're holding 17.5K, we can focus on higher, because this is really the threshold for the between bullish and bearish, the pivot. So that means, technically speaking, and I mentioned that before, from a technical point of view, I'm holding a core position in the 70 with a stop below the 17.5K region. Well, I haven't set the stop, but I will stop out manually probably, at least some of my positions, because I believe the price will drop quite strongly below 17.5K, or at least the setup isn't reliable anymore. While taking profits here in resistance, which I did this week, yeah, as I said, I entering in this support area, scaling in, and then scaling out in resistance, but holding a core for the area down here. So that means I'm basically out of my floating positions largely for Bitcoin, Ethereum, but I will buy back and scale in as we head down, if we head down. I think we should, but you never know. Okay, so that's why I like the idea of scaling into this larger support area. Again, you can say here, starting to scale in somewhere at the 50% retracement, maybe at 23K, all the way down. Because it can still, in one of the scenarios that I just showed you, it could be that we finish this green wave 1 only up here on the 16th of March, or no, on the 14th of March, and we're only now coming down in wave 2. And that means we should head into the green support area once again. It's not unlikely, as I said to you before, because the wave 2, time-wise, was very, very short. So yeah, that's sort of where we are. And then in the very, 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 very short term, this is really the 1 hour chart. The idea is that we created an impulse. So as long as we're holding above the green box, the focus is on higher. And this particular pattern here with a 5-wave move to the upside is valid for me as long as we're holding the 21K level, 21,050. So as long as we're holding that level, I expect here the following lower degree pattern, wave 1 to the upside, wave 2 to the downside, so that we're holding the 21K low in a wave 2 and could then rally in the third wave, and that could take us to 30K plus. That's the short-term view here, and it's very important to understand that today the market didn't do much. This could still be an Elliott Wave triangle, maybe an extended one, or just a larger B wave as indicated here on the chart. But likelihood for me still suggests that we make one more low, especially as long as we're below resistance. This is the resistance for the B wave at 26,040. Getting above that level would indicate that most likely a more substantial low has already been made and we're rallying a bit higher. Can I rule out an overshooting B wave? No, but they don't happen very often in a wave 2, which this is. So I'm mainly looking at a zigzag or a double zigzag pattern here, WXY, with another leg to the downside, because the 50% retracement, which is an ideal target for the wave 2, was never reached. So for me, the trend is down here. Downtrend started here on the 14th of March. Not entirely confirmed. That the C wave started can really only be confirmed if we drop below the B wave low, which was here at 24K basically. And then we should reach 23K to 21K ideally, but not below 21K. If we go below 21K, it would invalidate the 1-2 setup, or at least make it very unlikely. But bear in mind, we're heading into much bigger support. So you have one support here and one support here. So it's, again, the higher level view remains below 17.5K. We are most likely starting a new bear market, or well, not a new bear market, but we just continue with the bear market. As long as we're above that, basically it can directly push higher, right? So we are still basically in a bullish setup then. And yeah, and that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.